Hi, this is James Shrug with Westpac London's end of day report for Monday, April the 29th. Well, another positive day on equity markets with momentum picking up throughout the session. The news wasn't so good. For example, in Europe we had the economic confidence indicator from the European Commission, the business climate index. Both of these are April numbers. They're both weaker for the second month running. In fact, mirroring losses they showed this time last year after early year optimism faded away. We're seeing that again this year. German inflation came in at 1.2%. That's the annual pace, the lowest since 2010, and suggesting that the European inflation numbers, which are out tomorrow, will probably fall to around 1.5%. Now, the ECB's definition of price stability is close to but below 2%. And inflation's kind of getting a fair bit below that now, so it's putting added pressure on them to cut rates. And in fact, the majority of economists surveyed this week expect the ECB to cut rates on Thursday. Our view is they'll probably wait until June, but it's looking like a close call. We had some US data today, including a flat core PCE deflator in March. That's a measure of inflation. Not really a surprise because we already had the quarterly figure late last week as part of the GDP report. The quarterly annualised inflation pace of 1.2% is up a bit from where it was the previous quarter, but still very low, and adds weight to the view that inflation is certainly no impediment to ongoing accommodative policy from the Fed. Pending home sales were up 1.5% in March. That's the new high since 2010, when sales were temporarily boosted by the tax credit for home buyers. The Dallas Fed Factory Index, it fell from 7 to -16 in April. Now, in 2010, 2011 and 2012, it had a mid-year plunge to around -15 or -20. So this is the fourth time, or fourth year in a row it's happened, the fourth year of recovery, fourth year there's been a big plunge in this index. And indeed all the regional Fed indexes have been pretty soft in April. So that suggests that the National ISM Factory Survey, which is out later this week, might have a softer bias to it as well. Although it could be that this is more an issue related to the surveys themselves and the way they're conducted or the way they're seasonally adjusted, rather than suggesting there's been a sudden collapse in economic activity. That's about it in terms of the main news events today. Markets are also positive because of the Italian political developments, whereby we've got a new Prime Minister in place. With Berlusconi pulling the strings, it still seems unlikely to me that this is going to be successful, particularly if the government tries to unwind the previous government under Mario Monti, his austerity measures that have been part of the reason that Italian bond yields have come back as far as they have from their highs above 7%. I mean, a 10-year bond yield in Italy now I think is something like only 80 basis points above those in Australia, which is a situation that doesn't seem right, doesn't seem sustainable. Either Aussie bond yields are going to fall or Italian ones are going to rise at some point soon. Okay, so market numbers. We've got the FTSE in London just ahead of the close, up 1/3%. The French market's up 1.4%. Germany's up 0.6%. Spain and Italy up around 2% each. And the Dow in the US is up almost 0.5% at the moment at 14,778. Commodities are positive too. We've got gold up 1.25% at $1,472 an ounce. Oil's up 1.25% as well. That's at $94.17 a barrel, and copper's up the same amount, 1.2%, 1.3% at 322 cents a pound. And the Aussie dollar's benefiting from this positive sentiment. It's at 1.036 against the US dollar at the moment. So, ECB later this week. Payrolls data in the US at the end of the week, the FOMC on Wednesday. Plenty to look forward to. I'll be around reporting it. I'll be back tomorrow.